On today's World Insight, China takes targeted stimulus measures with an easing in fiscal policy to sustain growth, according to the Central Economic Board Conference. So exactly what are China's priorities in 2025? The outlook on consumer spending and trade. Hear from Steven Alan Barnett, the IMF Senior Resident Representative in China.
Hello and welcome to World Insight with me, Tian. At the recent annual Central Economic Work Conference, the priorities on China's economy in 2025 were up for deliberation. China will take a more proactive fiscal policy with a higher deficit-to-GDP ratio. It will carry out a moderately loose monetary policy and take measures to ensure ample liquidity. According to the International Monetary Fund, or IMF, China remains the major contributor to global economic growth this year. How can China sustain growth? And how has China's pursuit of high-quality development affected global growth? On these, I spoke to Steve Barnett, the IMF Senior Resident Representative in China. And this is our very first conversation in a series of talks I will have with scholars and experts on China's economy. China's economy, reality check. Take a look. Well, this is a historic moment, isn't it, for the Chinese economy? Now, to share with you the latest data, China retail sales rose by 3% in November from a year ago, according to the National Bureau of Statistics, but that number was lower than the earlier expectation, which means the consumption was not necessarily to much satisfaction. What is your observation?
I mean, first of all, I tend to be very careful looking at the monthly data. Of course, we look at it because it has information. But month to month, as we like to say, the noise to signal ratio could be quite high. So I tend not to overinterpret any one move. Retail sales, of course, we all look at for signs of consumption. But we should know that retail sales is more than just household consumption. It also includes spending by, for example, government. So mapping retail sales into consumption is not 100% straightforward.
What exactly is the consumption picture that you are looking at?
You know, when I look at consumption, I tend to look away from the current cycle. We always kind of look, is consumption up or down, like the retail sales, and let's look at long trends in consumption.
How long is that trend?
I'll give you two trends. I think there's really two key points. Yeah. One is that consumption in China, if we go back 2 decades before the pandemic, was by far the fastest growing in the world. Let me say that again. Household consumption in China per person was by far the fastest growing in the world from 2000 to 2019. But there was a problem, if you can call it, and the problem was GDP grew even faster. So if we look at consumption as a share of GDP, in China it's among the lowest in the world. And so that points, I think, to the big challenge. Again, not the up and down of the cycle, but how can China move to a model where consumption steadily grows faster than GDP? And we would see that the consumption share then rising as a share of GDP, which to me means that living standards are growing faster than GDP.
So why is that when you said the consumption growth rate has always been slower than GDP? Now the GDP obviously slowed down compared to 10 years ago, which is double digit. How do you see the potential of consumption and the reality?
Yeah, the potential is clearly there. I think the reality is it will take policy measures to realize that potential. And mechanically, we can look at the low consumption to GDP. Mechanically comes from 2 factors. One is how much do households save? The other is how much of GDP and income do households get? And when we look at those two, so that also points to the solution. Lower savings, boost household income. When we look and compare across countries though, Chinese household income as a share of GDP is right around the median. Chinese household savings are really off the charts high. They have among the highest savings. In fact, I couldn't find a country with higher household savings than China. But so when we look for policy solutions, we need to look at both of those dimensions as well.
But you look at the general picture of the economy, the slower the economic growth is, more people tend to save, even though their income is not necessarily increasing. So it's like a vicious cycle in a way. How to break that vicious cycle, especially now when you know that the GDP is not going to grow double digit as it used to be.
Right.
And China is going through these structural changes, as we know. So is there a way to do it quickly, fast, and yet steadfastly?
Yeah, that is a great question. I think there is a solution. Again, first, some context. If we look at globally, most countries saw a rise in savings during the pandemic. And savings has only gradually returned to normal. China looks fairly normal there. Where China stands out is China, on top of a pandemic, also had really a once-in-a-generation welcome but big adjustment in the real estate market. And the real estate market is really important for Chinese households. 90% of urban households own a home. So that points to, you asked for solutions. I think that really two kinds of solutions. These are not to cyclically strengthen consumption. These are, remember, the goal is to permanently increase consumption, to permanently have consumption grow faster, or if not permanent, at least for a long period of time. I think one is, how do we boost household income? In China, income taxes are low, 1.2% of GDP per year. Social Security taxes are much higher, 5 times as high. So over 6% of GDP, very large, what us economists call labor tax wedge. In real simple terms, what does that mean? If I'm an employer and I hire a worker, if that worker costs me 100, the worker's getting roughly 60. That's nearly a 40% tax wedge. That's very high. It's European levels. Lowering that would immediately put cash in the hand of consumers. Moreover, it would primarily go to lower income consumers who actually spend more of their income. So that's a way to immediately put cash in the hands of consumers most likely to spend. It's also good for business, so that's area one, reduce the labor tax wedge.
Is it going to be too little for consumers' confidence to be boosted?
I think it's a key part of the solution. Probably by itself, is it enough? Hard to say, but you could, to pick numbers, what if permanently lower 2% of GDP? That's an awful lot of income going back to households. Again, this should be permanent. So permanently they know that their income today, tomorrow, is going to be higher. And to be clear, this is not a cash handout to households. This is letting households keep money that they've earned. Very, very different. It's more of a tax rebate or a tax reduction. But I think the second is to look at the social protection system and see what are the remaining gaps. And I think one that's really important is in China, there's still not good insurance for what we call catastrophic illness. If someone in the family gets very, very sick. Now, why does this matter? If we look at why households may be saving a lot, I think a key reason is people are saving in case someone in the family gets very sick. No longer need to save for basic health insurance because you have that coverage. So adding government catastrophic health insurance would help households reduce savings. They'd have confidence if someone got very sick. There's an insurance program for there. So that's an example of a very targeted measure that could also help reduce savings.
You see, most Chinese households' wealth are in the real estate. And the current price of the real estate or their housing might not necessarily match with the price when they bought it. And that's why there is a deficit of confidence. But what can be the solution when you have a structural change in which real estate will not be necessarily one of the very few pillars of China's economy? That has been a question facing China's economy for some time. So how do you see, on the one hand, this structural change that needs to be done? On the other hand, the average Chinese will now feel their family wealth is fading away.
It's a great question. I think this really is a critical question for the economy. Again, I always like to take a quick step backwards. If we look at the real estate market in China, which really was only liberalized in the late 1990s. For most cities, with a few exceptions, but most cities, real estate prices only went up. And real estate was a great investment for households, and it's now a major share of household wealth. You know, as soon as 2015, go back 2015, the IMF and our annual reports was highlighting disequilibrium in the real estate market, that supply was running ahead of demand, and that a costly multi-period adjustment was needed, 2015. Now we come to 2020, 2021, that adjustment didn't take place. The size of the problem was even bigger. The government really had the courage to say, now is the time we're going to adjust. You know, real estate, we estimate, if you count upstream and downstream, real estate was about 20% of value added of the economy. You know, I said 90% of households own a house, hugely important for local government finances. The bottom line is this adjustment was going to hurt. Right. The challenge is how to manage this adjustment as efficiently as possible to reduce the cost. When this adjustment is done, the economy is going to be on a much more sustainable footing. So in that respect, it's welcome. So I think the key advice, if I could give one piece of advice on real estate, is finish it. Finish the adjustment. So, you know, as we like to say, so that it's in the rearview mirror, so that it's behind us, and then people can move on with their life with a much more stable real estate market.
They were suggesting that the government should purchase the inventory housing. And yet, there's also debate about that, because if the government does that, it means the government could reward those who actually did not do it right.
Yeah.
So this is an interesting cycle, isn't it? It's like 2008 financial crisis. So who do you help? Do you help those who make the trouble? Or do you actually have to wait for those who make the trouble to collapse before everything can go back to the best or to the better?
Fantastic question. And I think this really gets to the crux of the challenge. You know, we call what you just described moral hazard.
Yes.
Bailing out people who misbehave.
And that's a big one, by the way.
It is a big one. I think that the real challenge when you're in an adjustment this big is the balance, the risk of moral hazard against the economic cost of a very protracted adjustment. I mean, we're arguably in the fourth year of the real estate adjustment. And so you're, as a policymaker, it's a tough call. You're trading off poison, if you will. Right. Moral hazard against the drag on the economy.
And not to mention, if you do that, there will be some others rushing to the cross line and trying to do things that would exactly meeting your criteria, right?
I sometimes make the analogy in tax policy, there's an amnesty.
Yeah, right.
And people say, one-time amnesty, only this one time. And of course, is it credible? Nonetheless, I think then the balance of risks here, finishing the real estate adjustment, given the significance for the macroeconomy, the significance for consumption, the significance for confidence, I would put much more weight on finishing that adjustment as fast as possible.
How to deal with that moral hazard you just said?
You know, in the balancing act, I think there's a case to put more weight on finishing the adjustment, a little bit less weight on the moral hazard. And one way to address moral hazard...
Would that prolong the hazard?
There's always a risk. I use this amnesty example. The idea would be to credibly say, but we're not going to do that again. And it's always hard to say that with credibility. I'm doing that today, but I'm not going to do it again. But the real moral hazard comes not only from rewarding bad behavior, but encouraging it in the future. So if we can find a way to say, hey, we're never going to do this again. But I think in these kind of details, I come back to the importance of finishing the real estate adjustment to jumpstart consumption, to jumpstart confidence. Yeah. So it's all these have to be balanced.
I love the logic of economists. Following your logic, who will provide the money? Where does the money come from to buy the inventory housing by the government? Is it central or is it local government? Will the public be satisfied by how the money is being used at a time of, quite a challenge?
Sure. So this is a great point, argument. Who's going to bear the cost? China, in some ways, is in a good position. The central government has the ability to bear these costs. That's not the case around the world, that we could easily say that a central government has the room on its balance sheet to absorb these costs. So with the emphasis on speed, I think there's a strong case saying just do it. And one can worry about the costs over time and say, okay, we got this done, now we need to see how much should the local government bear, how much should the central government bear. It would be a shame if the discussion over who pays that cost delays the adjustment. Actually, that discussion can keep happening, even as the adjustment is.
But that discussion has been going on for quite some time, isn't it? And that is the key discussion, isn't it?
It is a key discussion. Absolutely. But again, I come back to, if the longer the adjustment goes on, actually the costs of this discussion is costly. The costs go up, exactly. And it's not just the cost of like the financial cost, the cost to the economy, because this is holding back the recovery, or it's a significant headwind to growth. So that's why we would argue do it as efficiently and quickly as possible. I don't think that prohibits a subsequent discussion. Hey, we the central government paid this, you the local government have resources, you have assets, you have to contribute. I think that discussion could still happen after the cleanup.
Lately, we have seen some policies coming from the central bank and also from the finance ministry suggesting how some of the funding could come from, for example, through bonds and things like that. Will that work?
Yeah, I think the bottom line, China has the room. And that, again, it's a good position to be in compared to other countries who don't have the room.
Right.
So use it. The space is there. It can be used. When we did our annual consultation for China, to show you how we view these adjustments, we had an estimate of about 5% of GDP to deal with aspects of the real estate. And we argue that that shouldn't even count against the deficit. So we measure like a cyclically, it counts in an accounting sense, but in an economic sense, that we often move these one-off restructuring costs. We don't consider them stimulus. In some ways, it's cleaning up past expenses. This is common for all countries. So we put in 5% of GDP. And then when we measure the...
When did you come up with this number?
This number was in this year's annual consultation, but it was actually also in last year's. So it's not a new number. People have different figures. In some ways, it's more the point. Whatever the figure is, China has the space. They can use it. And we wouldn't view that as like a fiscal stimulus in the classic sense. And so we've had that in our numbers.
Over how long a period of time will that be done so that it can be done smoothly and more stably?
Well, we've already been at it for 4 years. So I think when we think of restructuring costs, I'm an old IMF economist. Early in my career, I was the last IMF res rep in Thailand, and I actually worked on the Thai program. Boy, the cost of that was much, much bigger in terms of the amount of real estate restructuring, arguably a bit different. But we know that countries can work through these problems, and that in some ways cleaning up the balance sheets, trying to get the problem in the rearview mirror, allows then the economy to move forward on a much healthier footing.
And that's only one part where the money is urgently needed. All the three solutions you suggested needs cash into it. Will that be handled well by the current fiscal situation of China's economy? Is there any calculation specifically about that? How much collectively of GDP would that be?
Yeah, in some ways, if you look at the advice we have, strengthen the social protection system, lower payroll taxes, all of those are...
Plus housing.
All of those are increasing the deficit.
Right.
And so over time, we see that China has a need for fiscal adjustment to reduce the deficit over time. And so we have a fairly sizable adjustment over 10 years of actually 7.5% of GDP, and that would stabilize the debt level. But again, China has the room to do this, so that's a quite feasible adjustment path. But there's another key factor, and maybe you'll come to, I don't want to jump the gun, and that's growth.
Yes. What about it?
So, all of these problems are much easier to solve in an economy with growth. And really critical here is nominal GDP growth. We want real growth, but also to have real growth in declining prices, the denominator is getting, nominal GDP is getting smaller and smaller. So we need nominal GDP to grow with both inflation at target and real growth.
What is real growth for the average Joe on the street?
So I was going to give an economic answer. I mean, real growth for the average Joe probably depends where you are.
Let's just say where we are right now in Beijing, and let's also put another example of a bit far away from here.
Okay. Yeah. I think, for me, we're in Central Business District, where actually I live and where I walk to work here. And I feel like real growth since the pandemic kind of matches what we're seeing in consumer sentiment, which is that at least the places around here where I go, doesn't seem like we've fully recovered to the kind of growth rates we saw pre-pandemic. I think that, again, points to this solutions. We talked about a bunch of the solutions, but I think there's two that are related to growth and directly consumption that are a little nuanced, but super important. And one is the service sector. China has huge potential to increase growth in the service sector, get huge gains in productivity. And service sector has two benefits that are maybe not always well understood. One, it actually is good for the environment. To be oversimplified, services are less polluting than manufacturing. But the second is that labor share of income is higher in services. A fancy way of saying, as the economy moves more towards services, household income as a share of GDP will go up and consumption will go up. So it's actually not only critical for generating growth in the medium term, but also for boosting household share of income and therefore consumption. And I think this could contribute a lot to raising the consumption to GDP ratio over time, having the economy pivot more and more to service sector. Our research shows that there's plenty of potential.
About services, the quality of service is extremely important for consumers. You see, as some economists pointed out, there is an interesting tendency. On the one hand, people are more careful with their pocket, with their wallet, or their WeChat Pay. But on the other hand, their understanding of consumption quality, service quality certainly has been elevated. After all, China is open to the rest of the world. People travel and they see the best. So how to make sure, on the one hand, more services sector can be further nurtured, but on the other hand, quality can be maintained and efficiently improved so that consumers feel they're paying for the right quality. Right. I think that seems to be quite a dividend as we see today.
Yeah, that's a great question. I think there's a really simple answer. The market. Markets are really good at that. Markets are really good at delivering consumers what they want. Yeah. So if the market environment is conducive to a competitive market where firms can enter, resources will flow to meeting these demands of consumers, and it truly is a win-win. Consumers get better products, the economy pivots more towards consumption, and the economy continues to find a new engine of growth.
Right. Before the year end, there will be always debate about whether, actually it will be mid-January, right? Next year, the number of GDP will come out, right? So, Steve, as you earlier advised, I understand the number of GDP for the year 2024 will only come out mid-January. That's usually the case. So from now until then, I'm sure the debate will continue as to whether that around 5% will be achieved. And of course, the next question is, what about 2025? What likely to be the growth target? So what is the IMF official position? And what about someone like you, right here, standing on the ground here in China, looking at different provinces and have your reality check?
Sure. So the official numbers from the IMF, which I should say were published in October. So we forecast 4.8% growth for this year. I would argue that is around 5. And certainly it rounds to 5. That number was done.
Don't you love the magic of language?
Yes, around 5. That number was done before the Q3 GDP came out. And Q3 GDP was a little weaker than we thought. It beat market expectations, but it was a little weaker than we had. But also we've seen a lot more policy effort, policy support since then. So I think we're feeling okay at around 5%. The risks are fairly balanced. Our forecast, also done in October for 2025, is 4.5% growth. For that
Why
year.
lower?
I think that in some ways this reflects just a trend slowdown in growth in China. And I think, at a deeper level, I'm a big believer growth depends on productivity. Productivity depends on reforms. And maybe we don't look at that year to year, there's all sorts of shocks, but over the long run. And I think the message, and everything is really, if I could pick one message on growth, is that the number itself is not so important as how you get there. Something the government also says, the quality of growth. 4.5% achieved through, for example, wasteful spending versus a 4.5% achieved through reforms that enhance productivity are very, very different. And I think that quality of growth is going to be the key. And for me as a macroeconomist, quality means productivity driven.
And that's all the time we have for today. If you'd like to know more, search World Insight. Check out our YouTube channel. Follow us on X and Facebook. I'm Tian Wei on behalf of the team. Thanks for being with us.